Can ChatGPT pick better stocks than the S&P 500? We tested it by giving ChatGPT $1,000 and asking it what to buy. Then we compared those picks to the S&P 500 over 6 months to see who came out ahead. More people are using AI tools like ChatGPT to guide their investment choices. Whether it's generating stock ideas or understanding market trends, AI is becoming a real part of personal finance. Some users say it saves time, others say it helps explain complex topics in plain English. We wanted to see if it could also beat the market. For this test, we used ChatGPT 4.0, the latest model released by OpenAI. It's the version with improved reasoning, faster response time, and better memory. We gave it a very simple prompt in early January 2025. We asked, if I had $1,000 to invest in the stock market right now, what would you recommend? We used a simulated portfolio tracker to log the stock picks and monitor performance over 6 months. This made it easier to compare ChatGPT's portfolio to the S&P 500. For our benchmark, we used SPY, the SPDR SP 500 ETF, which tracks the performance of the top 500 companies in the US stock market. We gave ChatGPT a few conditions. It had to diversify the portfolio across industries. It had to choose stocks with strong past performance or future potential based on recent data. It couldn't recommend speculative penny stocks or cryptocurrencies. The portfolio had to be made up of well-known publicly traded companies. We also asked it to explain why it chose each one. The model responded with a list of 5 stocks and allocated $200 to each. First was NVIDIA. ChatGPT said NVIDIA is a market leader in GPUs and benefits directly from the rising demand for AI infrastructure. It cited strong earnings growth and continued innovation as reasons to buy. Second was Amazon. It noted Amazon's leadership in both e-commerce and cloud computing. It also mentioned that AWS, Amazon's cloud business, remains a long-term driver of profit. Third was Tesla. The AI pointed out that Tesla continues to dominate the electric vehicle market and has growing interest in energy storage solutions. It also said Tesla's strong brand and innovation make it a good long-term play despite some recent volatility. Fourth was Meta platforms. ChatGPT highlighted Meta's investment in the metaverse and artificial intelligence, along with its advertising strength on Facebook and Instagram. It said the company was undervalued compared to its earnings growth. Last was AMD. It said AMD is a rising competitor in the chip space and has been taking market share from Intel. With new product launches and partnerships, it saw AMD as a strong growth stock. Each of these companies operates in a different segment of the tech world, from semiconductors to social media. The model's rationale was based on company fundamentals, future trends, and recent performance history. Though ChatGPT can't browse the internet or access live prices, it generates answers using a wide range of data it was trained on, up to its knowledge cutoff. We tracked the portfolio beginning January 2nd, 2025, and compared it to SPY over the same period. We used actual prices from that date as entry points. Each stock was allocated an equal share of the $1,000. We monitored gains, losses, and volatility in each position. The S&P 500 returned 0.51% over the first 5 months of the year, according to current data. That means the benchmark stayed mostly flat with some ups and downs, but little total growth. Now here's how ChatGPT's portfolio performed. NVIDIA increased significantly over the period, driven by strong demand for AI chips. The company announced new partnerships and product releases, which helped boost investor confidence. Amazon also posted gains, helped by solid quarterly earnings and growth in AWS. Meta rose as well, especially after releasing new AI-powered tools and improving ad performance. AMD showed moderate growth, It gained from positive market trends in semiconductors and beat earnings expectations. Tesla was the only position that declined slightly. The stock dropped after a weaker than expected quarter and news of slowing delivery growth. By June 2nd, the overall value of ChatGPT's portfolio had grown to $1,035.90. That's a return of 3.59% over 6 months. Compared to the S&P 500's 0.51% return, ChatGPT's picks came out ahead. The AI outperformed the index by a margin of more than 3 percentage points. This result shows that ChatGPT can build a basic, diversified portfolio that beats the market in some periods. However, it's important to understand what made this outcome possible and what the limits are. One reason the portfolio performed well is that it was heavily weighted toward tech, a sector that has led the market in 2025. Stocks like Nvidia and Meta have been strong because of developments in artificial intelligence and digital advertising. The gains were not guaranteed. They reflected the momentum already in the sector. ChatGPT selected companies with strong fundamentals and market leadership, but its recommendations didn't include any special insight or real-time analysis. Another point to consider is volatility. These stocks move more than the average S&P 500 company. That means they can deliver higher gains, but also greater losses. The AI portfolio could just as easily have underperformed if 1 or 2 stocks had a rough quarter. Also, ChatGPT doesn't know what's happening in the market right now. It cannot see live earnings reports or current price movements. Its knowledge ends with the last date it was trained on. That's why its advice shouldn't be treated as predictive. It can't react to new information, policy changes, or earnings surprises. Still, the result is encouraging for anyone who wants to use AI as a financial research assistant. If you're a retail investor, you can use ChatGPT to explore different sectors, break down financial reports, and compare investment strategies. It can explain terms like free cash flow or price to earnings ratio in simple language. It can summarize analyst views and explain why one stock might be a better long-term bet than another. However, it should never replace deeper research. You should always check the company's actual financials, consider your own goals and risk level, and avoid acting only on a chatbot suggestion. AI tools like ChatGPT are helpful for idea generation. They are good at making sense of large trends and filtering complex topics into plain explanations, but they're not designed to manage money or make trades. They don't have access to brokerage accounts. They don't know your financial goals or risk tolerance. This experiment shows that ChatGPT can outperform the S&P 500 over a short period, but that's only one data point. Past performance is not a guarantee of future results. The market changes fast. What works in one quarter might not work in the next. Investors still need to stay informed, be patient, and follow a plan that fits their own needs. If you want to try this yourself, start by asking ChatGPT for a diversified stock portfolio based on your investing goals. Be specific with your prompts. For example, ask for dividend-paying companies if you're looking for income, or ask for high-growth companies in tech or healthcare. Then take those picks and research them further on sites like Yahoo Finance or Morningstar. You can also use a portfolio simulator to track how your AI-generated picks perform over time. This helps you understand how the stocks behave in real market conditions without risking real money. Look at how they respond to earnings reports, market changes, or global events. At the end of the day, ChatGPT can support your investing journey. It helps explain the markets. It gives you ideas. It can even suggest ways to diversify. But it won't replace thoughtful research, experience, or professional advice. The goal isn't to find a perfect stock picker. The goal is to use technology to become a more informed investor. That means combining the speed of AI with your own judgment and learning over time. When used that way, AI tools like ChatGPT can be a valuable part of your financial toolkit. Does it replace real analysis? Not quite, but it's a powerful assistant that can save time and help you make better choices. I've put some helpful links in the description to help you on your financial journey, so check those out. What do you think about using AI when it comes to investing your money? Let me know in the comments below, and don't forget to like and subscribe while you're there.